What's up, traders? Welcome to another section of the Greatness Forex Academy. In this section, today is Wednesday, and like I promised before, in this section, we just want to go through the pairs we were added to our watch list on Saturday. What are we going to do today? We just want to see from the COT perspective if we are still going to take the trades or leave the trades. So without wasting much of your time, let's go straight into the chart and see what we've got. Now, looking at this EURUSD, I haven't shorted this EURUSD. I saw some students shorted it, and I was wondering where these people got their shorts from. Because if you are to take this Monday, Tuesday, you are just to scalp, or no, we don't scalp. You are just to day trade this. That is, you can hold your trades for the whole Monday and close before Tuesday. Before we wait for COT, because I updated the COT website on Tuesday, and you are supposed to check the COT every Tuesday here and enter your swing trades by Tuesday. On Monday is just for day trading, and Friday you can also day trade, no new entries. Okay, from EURUSD perspective, on Saturday by weekend, I was telling you to look for a short opportunity because we had a wedge from the 4-hour time frame, which is the reason for this upward trend line. And looking at it from this daily time frame, you can also see a trend line here also, which market is supposed to respect and move down, but unfortunately it was broken and the market went to the upside. And I was giving you two direction. I told you at this region now, there's an equal high, so the market is supposed to move down. Unfortunately, it broke the high, and the retest of this high, we're supposed to look for a long. Now let's know why we didn't take this short. We didn't take this short because our rules were certified from the 4-hour time frame, and let's see from the COT perspective why this short was invalid. Euro and USD, let's see what we have here. This is the USD. The current data are now the first. Before we started from the last to the first, now from first to last. USD, okay, USD, we had 12k longs, 17k shorts, 2k longs were added, 2k shorts were added, and overall the long is 53.1% and the short is 74.7%. I will have a negative net position, and if you check the last net position here, it was a positive net position. So however, from positive to negative. Now what can we see here? Overall, you can see the US dollar, it's moving down. The bears are in control of the US dollar. I mean, those people pushing the market downward are in control of the US dollar. So the bears are in charge. Overall, US dollar, it's a downtrend, moving down. Now remember, each currency has its database, and combination of two currency makes a currency pair. So let's pair it with euro. Overall, euro, we have 185k longs, 81k shorts. Change a long, 4k longs were added, 130 shorts were added. Overall long, we have 31.2%, and shorts we have 13.7%. And the net position moved from previously from 81k to 103k, which is now from positive to positive, and there was an increase. Overall, euro is what? Bullish. Now what are we to expect? Since USD is bearish and euro is bullish, so we expect an uptrend. The market is supposed to start moving to the upside. In case you don't understand the reason why I'm saying this, if you join the mentorship program, you will understand from the videos why I'm saying this, how to read the COT data. Now, since euro is bullish and USD is bearish, overall we are expecting a bullish market. This is the reason our short didn't hold. Technically, we are supposed to short this pair, but fundamentally the market moved to the upside. Remember, COT are positions of hedge funds, open and close position of hedge funds, the big boys, the banks, institutions, and let me say the market makers. So the market makers said this is going to buy. And what did they do? I told you the trick before, that they are going to give you formation that will make everyone start selling. They will use your money to create, oh, this is a bit advanced, but this is a bit advanced. This is for the students. This is for the students. There, I would have showed you the trick why this was shorting on Monday. Many persons were in shorts, and what the hedge funds did to take everybody out. That's a trick. That's a personal trick for the students. There's no need saying it here. Okay, so this is the reason it's logging. So this is still valid. If you want to join the bulls, you can as well wait for a pullback to this region and follow it at key level. We don't buy from high, neither do we sell from low. We wait for pullbacks. Okay, for GBPJPY, Great British Pound JPY. Okay, for GBPJPY, GBPJPY, Great British Pound and Japanese yen. I told you overall you have to look for a long opportunity because structure was broken, and a retest of that structure for a long opportunity is a great idea. And as you can see, the market is currently retesting to that area, giving us an opportunity to long. Technically, this is giving us an opportunity to long if we go over to the 4-hour time frame where we'll look for entry below are satisfied. But let's add the COT. Let's add the COT. Now let's go for Great British Pound, which is the base currency. Now Great British Pound, looking at it here, we have 39k longs, 56k shorts, 5k longs were added, 886 shorts were added. Overall, we have in percentage we have 22.1% long and 31.2% shorts. And the net positions overall, we have a 16k minus 60k negative net position, and previously you can see we have minus 36k here, and as you can see there was a reduction in the net position. Overall, what does this mean? It means the bears are leading the Great British Pound, meaning the bears are leading the Great British Pound. So for you to take along with this pair, that means this is a bit advanced. Okay, for the students, let me just drop it here. For you to take along with this pair, since the Great British Pound is bearish, you should expect. Okay, do you understand already from what I've said? I believe you understand already. It's a simple concept. Now for the Japanese yen, we have 44k longs, 27k shorts, 1k longs were added, 8k shorts were added, and overall we have 31.8% in percentage long and 90.7% in percentage short, and overall we have 16k net position, a positive one, and previously we had 27k net position, 27k net position, and it was still positive, but there was a reduction. Now what is this telling me? Overall, this is giving me a buy signal. Now why is it a buy signal? This is not for you, this is for the students. The reason this is going to buy is clearly in the COT. Now I haven't seen the COT, I won't tick twice with my technical analysis. Remember, technical, we use confluence from the structures, the key levels, we do confluence from the tools, multi-time frame analysis, and also if you want to use indicators, that is left for you. And finally, I use confluence from COT, and COT is still clearly telling me to long this. So COT has confirmed this. You can start looking for your entries from the 4-hour time frame if it is satisfied. Remember, we won't just long this pair until our entry rules are satisfied. However, we can end up not trading this if our entry rules are not satisfied. So the fundamental low is not enough for us to take this long if the rules are not satisfied. So overall, COT is telling us EURUSD long, GBPJPY long, and finally Euro CAD. As we have seen before, Euro is bullish, so let's look at CAD and see what we can get from CAD. Euro is bullish, so let's look at the Canadian dollars. Let's see if we have a bullish market also or a bearish market. Okay, the Canadian dollars, we have 31k longs, 48k short, 3k longs were added, minus 215 shorts were closed, and overall we have 26.1% percentage in long and 40% in shorts. Overall we have a minus 16k net positions, which is negative, and previously we have a minus 33k net positions, also negative, but there was a reduction in the net position. So overall the CAD is what? Bearish. So overall, what will I be looking at for Euro CAD? Since Euro is bullish and CAD is bearish, I should be looking at for a short opportunity. If technically I'm seeing a short Opportunity. Okay, technically we are having a long opportunity. Market is currently in a on our standard W formation, and this is a neckline with W formation as you've seen, and the market is supposed to come for a retest for it to continue the move to the upside. However, I told you the market can decide to respect the structure before the neckline, which is currently going for a retest. As you can see, the trend line was broken because this is a wedge, a falling wedge. It was broken, and also this an upward trend line was also respected, and this is also a triangle which was also broken. You can see the confluences from this trade alone, and a retest here will give a long opportunity. Now COT is selling us shorts, and technically we are getting more than 5 confluences telling us long. So what are you going to do? Instead of risking a whole 1% to take this trade, you can risk 0.5%, and if you are the type that is risking 5% of your account to take this trade, you can decide to risk just 2% or 2.5% this time to take this trade, because fundamentally this trade is not in agreement with COT. The trade is not in agreement with COT, so it's a very risky trade, and you should trade it with low risk. You can only risk your full, not your full money, your total risk that you do take. Like if you are using 5% or whatever, which is not advisable, you can take it if COT is in agreement, just like GBPJPY. But for EURUSD, technically, if you want to take this trade alone, you can take it with 0.5%, which is my advice. If I'm going to take this trade, it's going to be a day trade, or I might leave it for just 3 days. For a 1 to 3 weeks trade, well, even if I'm getting more than 1 to 3, I will target just 1 to 3 using minimal risk, because COT is not in agreement with this. So this is all for now. Don't forget to subscribe to this channel, share to your friends and family who want free forex education, and do not sell any of our free stuff to anyone. Everything you are getting here is free. You can invite your friend. Why not tell someone to come and enjoy the same thing you are getting for free? Because I believe so many mentors are selling what you are getting for free here to you. So no need to buy. You can join us on Telegram, on Facebook, on WhatsApp, and every other place that we are, and get our free value, and also our boom and crash strategy. So you all know we don't have just our forex strategy, which is a 3-in-1 rule based strategy. We also have our boom and crash 3-in-1 rule based strategy. It's solely for boom and crash only, and most times it works for volatility indexes. So you can come get it, and if you want, this is all we do. This is all for now. Thank you for watching, and have a wonderful trade week ahead. God bless.